Have you ever wondered what the hell you need to do to pay less tax on the things you buy? Or do you even know if it's really true that you can get 20% back on the purchases that you make? Or even what kind of purchases they need to be able to do that? Well, if that's you, then this video is perfect for you. Today, we're looking at the expenses and tax that us streamers need to be aware of as we go about our creative pursuits, and you may just save yourself a pretty penny from the government. And for those of you that aren't aware, this is part 2 of a 3-part series all about tax and Twitch and the UK tax system for streamers and content creators like us. Last week we covered income and tax in the UK, and next week we're going to be talking about how we bring income and expenses together to track everything and make sure we're paying the right amount of tax and we're not leaving ourselves shortchanged at the end of the year. But for this week's video, we're talking specifically about expenses and tax. So before we get into that, let me introduce myself. My name's Tom, also known as Brick Guy. Hello. I help content creators build their ultimate stream life balance, whether that's making sure that they're growing and improving their streams or other content creation pursuits, or smashing everything else that life has to throw at them and making sure that they're growing in their day-to-day lives and improving things in other areas of their life, while also keeping productive and making sure that they're getting the best out of their streams. You can catch me streaming on Twitch on Wednesdays and Saturdays, and you can get the weekly videos from here on YouTube by subscribing below, so make sure you do that. We also have a Discord if you want to chat with me in a more text-based setting, I guess you could say, and the link for that will be in the description below as well. So if this kind of content, building your ultimate stream life balance, as well as looking at the business side of Twitch, is the kind of thing that interests you, then you can join our Discord there and follow me on social media as well. Twitter, Instagram, everything will be in the description links below. And here we are with the topic of today's main video, expenses and tax. Now, the contents will be on the timeline of the video below, so if there's a particular section that you want to go to and want to skip ahead to, then by all means feel free, but I do recommend watching through the whole video so you have a complete understanding of the tax system when it comes to expenses here in the UK. We have 6 topics that we're going to be covering in today's video. The first thing we're going to be starting out with is why we need to track expenses and what they do to affect our tax bill at the end of each tax year. The second thing we're going to be going through is what allowable expenses are and how they can apply to streamers and content creators like us. Third of all, we'll be looking at how we break down what is an allowable expense between business and personal use and how we can work out the two differences so that we're only tracking the business side of our allowable expenses. Number 4, we're going to be looking at when we should be claiming expenses versus claiming the trading allowance that we went through in last week's video. Number 5, we're going to be looking at VAT specifically and if it's really worth being able to claim back 20% tax on the purchases that we make. And then finally, we're going to be talking about next steps and the actual actions you need to be taken to make sure that you're tracking all your expenses and that you're factoring that into your end of your year tax return if that's what you need to get to. And as always, similar to my last week's video, which if you haven't seen, I'll put it up there. Make sure you do go and see it. It covers everything about income and is a really good starting point for these kinds of videos. But like I said in last week's video, all information here is subject to change and inevitably will change and generally does change with budget announcements from the government. As well as that, I'm not a financial advisor and I do always recommend seeking independent professional financial advice before making any major decisions with your money. All information here is general and doesn't factor in your specific financial situation. And really those are the main disclaimers, so let's get started with why we need to record expenses. So the first thing I want to do for you is explain what exactly expenses do for tax. In last week's examples, what we did is we only took into account income and how that affects tax. Now what we're going to do here in this week's video is take things one step further and factor in the expenses and the things we pay for and how that affects our tax, because contrary to what people might think, expenses are actually quite good for when it comes to our tax returns. And what they do is it works out our taxable income for the year. So by doing this, we're looking at not our total income, rather we're looking at essentially the profit that we make as a business, and that makes our taxable income. So how you can work this out is you can take your total business income that you make from Twitch, from YouTube, from Patreon, OnlyFans, everything else, all your income that you've earned from this business of yours over the past year. You take away from that the allowable expenses that you've spent over the course of that year, and that makes your taxable income. We're going to go into detail in a bit about what allowable expenses are and the kinds of allowable expenses that are technically acceptable by the government. But for the purpose of this, all I need you to understand is that you're not taxed on your total income here, which you might have thought might have been the case after watching last week's video. But for the purposes of taking things step by step, I just wanted to explain income only first, and now we're taking it to that one level deeper and factoring in expenses as well. So here we have a practical example, and if you did watch last week's video, you'll remember we had someone, as an example, earning $25,000 a year from traditional paid employment. In last week's example, they earned £1,000 from business income. We've now increased that to £5,000, so we can account for £2,000 of allowable expenses. So again, I'll go through allowable expenses in a little while, but for now what we want to do here is just to show you that what's happened is they've kept their same job, they're still earning £25,000 a year, but they're also earning £5,000 on the side from their business income, their content creation, their Twitch streams, whatever it might be. And over the course of that year, they've spent £2,000 towards that business, leaving them with £3,000 profit or taxable income, which nets them £28,000 in a year. That's £25,000 paid employment and £3,000 taxable income from their business. So the first thing that we need to understand is that the tax that comes from their paid employment is already paid before they receive their salary. So that just gets deducted automatically from this person's salary as an employee. So when it comes to doing a self-assessment at the end of the tax year, they only need to do it based on the fact that they've received £5,000 from their business and spent £2,000 on their business, and therefore they must pay tax on the £3,000 that's left over, the £3,000 taxable income. And based on the numbers we have here, if you remember from last week's video about tax bands, all of this income puts them in the 20% tax band, which means they'll likely pay around 20% on the £3,000 that they've earned, which works out to be a tax bill in the region of £600. I'm oversimplifying here, but these are the headline numbers for you. So next up, now we've got the basic maths out of the way, we can start looking at allowable expenses and exactly what these are. So the main thing you need to know about allowable expenses is that they are essentially any cost that is used to run the business to help someone earn an income from that business. So money generated by the business cannot be used for personal purchases. That's an unallowable expense, as I guess you could say. But for us streamers, an allowable expense could be the things that we use to run the stream, to create content, or generate any other form of income. So for example, paying an artist for emotes for your Twitch stream would be an example of an allowable expense, because you are using those emotes to enhance your content, to add to your content, and essentially you're only using those for your stream. However, an unallowable expense could be something that you use for personal use. For example, if you buy yourself a new game, you want to treat yourself, but you end up not streaming that game, not doing anything with that game to do with your business, that will be an unallowable expense. However, if it's a game that you do stream very regularly or stream 100% of your gameplay from that game, then that would, on the other hand, be considered an allowable expense. So when you think about it like that, it does create a bit of a grey area when it comes to certain types of expenses. What I've done here is I've broken down the most common categories of expenses. The list isn't exhaustive, it doesn't cover everything. I've tried to generalize where possible, but it should give you a starting point for exactly what could be covered under the allowable expenses rule. And this could be things like hardware. For example, if you buy a new PC or you build some parts like a new graphics card to help with your video encoding when you're streaming, or some RAM to help with your rendering. I think that's what RAM does. I'm not 100% sure. I still don't know how PC parts work. But hardware like that, for example, buying a new camera for your stream could be considered an allowable expense. The next thing is software. So for example, if you're buying a digital game, or if you're buying a specific productivity tool like Adobe Photoshop to help with your thumbnails, that could be an allowable expense because you're specifically using that to help you produce content. Utilities is a very interesting one. Let's face it, the amount of lights and just running the PC all costs electricity, let alone the need to heat the room, even though the lights are warm enough, let's be honest, but to heat the room as well, to use internet, all of these utilities cost money, and we wouldn't necessarily be spending as much money on these utilities if we weren't streaming or creating videos or doing any other kind of business. For the purposes of this video, I'm just going to generalize to business instead of content creation and streaming. So bearing that in mind, you can also work out what utilities you are using based on how much time you're spending on your business, and we'll go into some sums and formulas later on, but bear that in mind as well. Your electricity, your gas, all of that could be used as a business expense. Costumes is a very interesting one. If you're a cosplayer, or you buy some props or some things that help you build a character for your business, then that's an allowable expense as well. Again, you'll have to differentiate between, am I just buying t-shirts that look good for the stream? They're probably not an allowable expense because you're also using them for personal use. But if it's something you are specifically buying for your business, then yes, that could be an allowable expense. The next one we have is physical products that are resold, and we're not specifically talking about things like merch here, which are distributed through third parties where you don't even pay for the product yourself before selling it on because the third party deals with all of that. But say for instance, you want to sell your own bath water. I think we all know what I'm talking about here. You buy the jars, you fill the bath water would be a utility cost, but you fill the bath, and those jars you've spent, the postage you've spent, that's all an allowable expense to ship those products to the people that want your bath water. Up next we have travel costs, which is fairly straightforward. If you're spending money to take a train or a taxi or any other form of transport to get from one place to another place for business reasons, then that would be an allowable expense. So possibly, technically speaking, flying to a TwitchCon event and paying for your hotel and your ticket, I think that could technically be considered an allowable expense. So bear that in mind as well next time you're thinking of booking that trip. And then we also have people and services. So I've put this under one category. The UK government website generally says like staff wages and salaries and things like that, but I think realistically it could also include things like Fiverr and paying people to give you a service like doing your Twitch emotes or creating animations or sound effects for you. And then finally, training. If you take part in any kind of training course, you purchase books, all of the costs associated with that, so long as they are for your business and to help improve your business, that is an allowable expense as well. So really, when you think about it, there is quite a broad scope of costs that you could incur as a result of your business that could become an allowable expense. And you could be a bit creative here, and if you are able to reason that something you're buying is for the purpose of your business, then I think you could technically get away with anything, but don't quote me on that. Just make sure you are careful, and if you are ever questioned on something, that you do have the receipts, the paperwork, and the records to be able to back it up that that was indeed used for a business purchase. So now we get to probably the most interesting yet brain-bending part of the video. How do you define what is a business versus a personal expense? And as it says here, many costs will have some overlap between business and personal. So if you do buy a new PC, let's say you go onto NZXT's website and you buy £1,500 PC, for example, but you also want to play some games offline, you use that PC for a bit of chatting, just watch YouTube videos, stuff like that. And let's say you spend about 50% of your time on that PC for your business and 50% of your time for personal use, then very simply 50% of the cost of that PC, so it's £1,500 PC, £750 of that PC is an allowable expense and what should be tracked as part of your business expenses tracking. And the same, again, as I've mentioned earlier, applies to utilities. And the government applies quite a general rule of thumb when it comes to tracking this. And what they suggest is that you take your specific utility bill. Let's say you track your electricity and you have a 5-room property and your electricity bill is £50 per month, and 50% of your time spent in the room where you do your business is spent on the business. We're going to get a bit complicated here. Don't worry, there will be some visuals behind this. But you have 5 rooms, £50 per month. So you would think about that and say, okay, well, 1 room of my property is used for my business. So that's 1/5 of the £50, which is £10. But 50% of my time in that room is spent on the business, whereas the 50% of the time is personal use. So again, 50% of the £10 is actually £5. So the allowable expense is £5 per month. So to summarize everything that I went through on the previous slide, here we have a practical example of what a series of allowable tracked expenses could look like for a streamer. Now, don't pay attention to how ugly as heck this table is. I will get round to designing it and making it look pretty. But for now, what we're here to do is simply focus on the numbers. And here we have an example of a person that lives in a property that has 5 rooms. It has a living room, kitchen, bathroom, and 2 bedrooms, let's say. And they spend 50% of their time in one of the rooms that's dedicated to their kind of business, as well as maybe working from home. And of that 50% of their time in that room, that's spent on the business itself, on that PC, doing their online content creation. And they've been tracking their expenses for the whole year, and using the same categories that we went through in the last page, their actual expenses on all of those categories was nearly close to £4,000. But when they started going through the numbers and how much time they're spending on the computer and in that room, the actual allowable expenses is almost half that, or it's just over half that, at closer to £2,000. So if we go through each item one by one, or most items one by one, we'll be able to break this down for you and make it a lot clearer. So they're spending 50% of their time on the computer for their business, and the other 50% of their time just doing personal things, chatting with friends, watching YouTube videos, blah, blah, blah. So they've spent £2,000 on this computer. However, because they're only spending 50% of their time doing business things on that computer, the actual allowable expense is £1,000. And likewise with software, they spend £360 a year for Photoshop and they play World of Warcraft. However, although Photoshop is used exclusively for the business, World of Warcraft is in fact played on stream and played personally as well off stream, unrelated to the business. So only 50% of their World of Warcraft subscription can be an allowable expense, which when you factor in 50% of WoW plus 100% of Photoshop works out to be roughly £300. So you can see there, £60 of that total cost isn't in fact an allowable expense. The same goes for utilities. They're spending 50% of their time in one of the 5 rooms of the property. So 1 out of 5 is 20% of the total cost. But then you're also doing half of that 20%, because half of the time in that one of the 5 rooms is spent on the business. So that's 10% in total, which is about £70 of the £700 is an allowable expense. And then thankfully, everything else is relatively straightforward. Let's say this person bought clothes or items to cosplay as Thrall from World of Warcraft, then the £100 they spent on that costume is in fact 100% an allowable expense, because they've used that to enhance their content. They're probably not going to use that for personal use. Maybe they will, I don't know, but that's just me putting down some numbers for you to help visualize all of this. And then on top of that, they travel to a convention center dressed as Thrall, so that £50 they spent on that travel there is in fact 100% an allowable expense. Over the course of the year, they've paid someone to help them with some animations for their transitions and their videos. That cost £100. So again, that animation work is used exclusively for their business. So £100 of that £100 is an allowable expense, meaning £100. And then just to piggyback off a video that I I made 2 weeks ago, which you can see up here, about stream coaching. They decided that they would like to take a stream coaching course which costs £400, and of course the stream is associated with their business, so 100% of that £400 is an allowable expense. But you can see here the differences, and it's mainly in the utilities really, and a bit of the software, and mostly the hardware as well, where the time they're spending is divided between business and personal. That's where the differences in the costs lie and what becomes an allowable expense. So do note that if you're able to track the most common things you're spending on, like games and stuff like that, and easy stuff, then all you really need to think about is exactly how much time you're spending in a room and how much of your time spent in the room on the devices that you're using are dedicated to the business versus personal use. It gets easier with time. It might be a bit tricky to set up at first, but thankfully next week's video is going to be about how we set that up, and I'll be sharing a resource that I create to make sure that you're tracking your time and making the calculations as simple as possible for you, so you don't have to go through the heavy brain work of trying to figure out how much of a proportion of your time is spent on business versus personal. But if that is all too much for you, then HMRC does have a simplified expenses rate. It's a flat rate for standard utilities. I think, as far as I know, it's just for electricity and gas. It may be other things as well, but I do know for a fact it doesn't include internet. But if there's some things you just simply can't be bothered to work out for, then it does give you a guidance based on the amount of hours you spend in a certain room, what your proportionate costs for those items will be. So there's a link there. Again, this resource will be in the description below. It's a continuation of the resource I created last week. It's going to be all one big resource dedicated to tax on this area. So next we have a continuation on what we talked about last week, which is the trading allowance. Now, if you're not aware, again, go watch last week's video. It's very useful to get a grounding foundation of tax and how to manage your business with online content creation. But what I did explain in that video is that you can benefit from a trading allowance, where if you earn less than £1,000 from your business in a tax year, then you can keep the first up to £1,000 completely free. You don't even have to declare it to the government. You don't have to do a self-assessment form or anything like that. No paperwork, no tax, no fuss. Just keep the money. So that's all good. However, if you do earn more than £1,000, then you can only claim trading allowance up to the first £1,000. So if you get £1,500 in a year, first £1,000 is tax-free, then you pay tax on the £500 that comes after that. But if you do that, if you do claim trading allowance, then you cannot claim expenses. And this is something I very lightly touched upon in last week's video, but I'm going to break it down here for you because it is related to expenses. You can only do one or the other. You can only claim trading allowance, or you can only claim expenses. So it's generally better to claim trading allowance if you have no expenses or very little expenses, and it makes more financial sense to keep £1,000 tax-free, if assuming you earned more than £1,000. But it is generally better to claim expenses if your trading income is more than £1,000 and satisfies one of these two conditions. So if your income is more than £1,000 and your allowable expenses are also more than £1,000, then it makes sense to claim expenses, because then you're getting more than £1,000 off your taxable income, if that makes sense. So to go back to the example earlier of someone earning £5,000, but their expenses are £2,000, then their total taxable income is £3,000 because they're taking the £2,000 away from the £5,000. If, however, you decided to do trading allowance instead of expenses, then you only get the £1,000 as a kind of like tax-free. So £5,000 minus £1,000 is £4,000 that gets taxed, as opposed to the £3,000 that would be if you claimed expenses. So if you claim expenses in that situation, you end up paying less tax because you have a smaller taxable income. And then the other situation we have here is if your allowable expenses are more than your trading income. So this is essentially if you operate at a loss, then you don't really want to still be, let's say you earn £5,000 but your expenses are £6,000. It really doesn't make sense for you to have to declare that £5,000 income to try and get trading allowance and get £1,000 off that £5,000, because then you're still going to be taxed on £4,000 of your income, even though you've already spent £6,000 working on your business. So if you say to the government that, look, I've earned £5,000, but I've also generated expenses of £6,000 towards this business and it's all allowable and it's all legit, then you shouldn't get taxed on that money because there is no taxable income for you to have earned over the course of that year. And then the final point we have here is to claim back VAT. Now, I've heard from some circles that they think if you buy something for your business, then you're entitled to claim back 20% of what you spent on that item, regardless. And this is what's known as VAT. In the UK, all goods are charged at a 20% markup at the point of purchase, which accounts for the government's value-added tax system. And some people think that if you buy something for your business, you can claim it back. This generally works if you're an employee at a company and you make a purchase and then you have to expense it back to the business. However, if you do want to do this, you have to register for VAT. And really, for businesses, it's completely optional to register for VAT unless your business turns over more than £85,000 per year, at which point it's mandatory to register for VAT. So for most people, I really don't recommend registering for VAT. I think it's overkill. It creates a lot more paperwork, it creates a lot more hurdles to jump over and hoops to jump through, all for just claiming 20% off the things that you buy already. I'd much rather go through the standard taxable income where you take your total income and your allowable expenses. I'd rather just go through that and keep it simple. And for most people earning £85,000 a year from their business, that's probably at the point at which you will start to want to run your business almost like a traditional business, with people handling your paperwork and your accounting and stuff like that anyway. So for most of us who generally probably prefer to operate as a sole trader and keep things nice and simple and focus more on the content creation, I really don't think VAT or registering for VAT is worth it. Yes, you can do it, but the extra paperwork, I'm just really not convinced of it myself. But like I said at the start of the video, always consult an independent professional financial advisor. You even get accountants that specialize in Twitch and online creators, so there's people like that will really be able to help you out. Always consult those people before making any major financial decisions with your money. But I think for the time being, just using the allowable expenses and taxable income model is probably going to be fine for the vast majority of you. And that really brings us to the end of this video. This slide here is pretty much the same as last week's video. What you need to do and the timeline. I'm not going to go through all of this because it's covered in last week's video. But basically, again, like I said before, the things you need to do right now are to file, store, and keep all of your paperwork associated with your income and your expenses, and then make sure you're tracking that in a single spreadsheet where you can easily work out how much you've earned and how much you've spent, and more importantly, work out your proportionate allowable expenses. Like I said, next week's video is going to be me showing a spreadsheet that I've created that allows you to track your income and your allowable expenses, and I'll talk through how to fill that out step by step. And then in the future, probably the second week of August, we'll do a live stream on a Wednesday. I'll get the exact date for next week's video, but we'll go through exactly what it takes to fill out this spreadsheet, and we can do it together. And we can use my costs as a real world example because I don't really mind sharing all that stuff. And then finally, if your income exceeds £1,000, whether you make a profit or not, register for self-assessment. But yeah, you don't really need to do that until at the latest October next year. So remember, there's loads of time to go through all of this. I do recommend starting as early as possible to make the overall process as stress-free and low impact on your life as possible. But do remember, if this is your first year starting with Twitch or doing online creation, starting your business, and let's say you started on the 6th of April this year, then all you need to do is just start tracking your expenses and your income from the 6th of April this year and stop tracking it at the 5th of April next year. See if you're eligible for self-assessment, and if you are, register by the 5th of October and then pay your tax by the 31st of January 2022, which is ages away. So like I say, you've got plenty of time. Just don't forget about it. Don't leave it to the side. Start tracking income and expenses now. But yeah, that's pretty much this video for this week. Like I said, next week's going to be about bringing all of this together in a spreadsheet and helping us track it. If you haven't seen last week's video, I highly recommend you watch that next, because that is going to be hugely important to next week's video, but it also gives you a much rounded picture of the tax system here in the UK. And the other thing I want to hear from you is, what was the most useful takeaway for you from this video? Do let me know in the comments below. And like I said, I'm on Twitch on Wednesdays and Saturdays if you want to chat to me about any of this stuff. And I am on Discord as well. Links to all of that will be below, and social medias and everything else if you want to chat with me on there. It's all good. So yeah, with that, I'll see you in the next video, which will be about tracking everything. And if you enjoy this video, if you know if this might help someone, then feel free to share it. And as always, I'll see you in the next one. Take care. All the best. Bye bye.